that market's theme going with Josh Gilbert from eToro. Josh, thanks for your time. We just saw the big lithium companies there all gaining a severe amount of value today. What's been really behind that rally?
Yeah, great to be with you, Ed. Look, it comes after what's been a really tough year for lithium miners. Pilbara, which is sort of one of the biggest names here in Australia, has been one of the worst performers on the ASX 200 so far this year. That's come as sort of lithium prices have fallen really heavily from their highs. For context, prices are down about 40%. The spot lithium price down about 40% in the past 12 months. That's coming from a few things, right? Weak electric vehicle demand. We've just seen that highlighted by BYD's price cuts in China, Tesla's price cuts across the world. And that's also seeing high inventories in the likes of China, for example, as well. So really putting pressure on the lithium sector right now. But what we've seen is a bit of a bounce in the lithium price. So for a long time, it's been a very strong downward trajectory for the lithium price. But in the last sort of week or so, we've seen a bit of a pickup from the lows. So some investors sort of maybe thinking that it could be the bottom here, looking to sort of move into some of these stocks that, have really fallen quite heavily, right? Pilbara, I spoke about there, down about 80% from its highs. The problem, I think, with some of these stocks is that we really don't know when that bottom is going to come in for this lithium price. There is a lot of downward pressure on lithium prices at the moment, and that's not good news for lithium companies. For example, if we look at Pilbara's balance sheet, its sort of cash balance has fallen about 40% year over year. So it's really eating away at its cash balance because, what it can charge for the lithium that it is producing is a lot less than what it could a year ago.
Yeah, look, obviously a bit of a sort of rise there for the lithium stocks, but what about the general ASX 200? It seems to be almost back to where it was in February when it set that all-time record high. Why all the positivity when there's so much uncertainty around the world right now?
Yeah, you're absolutely right. Great, month, I think, for the ASX all in all. And it's really come from this sort of risk on sentiment that we're seeing from investors. It's been sort of dubbed the taco, right, from President Trump, and that is that Trump always chickens out. And then ultimately what that signals is the view that he is willing to negotiate, and I think the key news from that came from the 90-day pause on tariffs last month for China. And that's obviously coming after what was, the 145% tariffs that he put in place. So really investors seeing some positivity in markets going risk on. And that's shown in sort of the Bitcoin price, hit a new record high last month. We had really strong performance from the tech sector in May, up about 20%. Again, that followed through from really strong sentiment from earnings season in the US, particularly the Magnificent Seven. Obviously, the AI boom is sort of coming through. There are question marks, though, for the ASX 200 being at record highs because earnings growth next year is looking pretty lackluster, or I should say for the current fiscal year. But markets are very forward-looking. They don't look to what's happening right now. They're looking to what's going to be happening in the future, and that is fiscal year 26 earnings are set to be positive around sort of 6 to 7%. We're also seeing the cash rate come down here locally as well. And with that GDP number that we had yesterday that was slightly weaker than expected, the expectation is that we will see rates fall even further as well. Markets pricing in about another 75 basis points worth of cuts as well. So that's also very positive for the ASX 200, and that's why we're sort of sat near those record highs.
Yeah, those rate cuts have certainly helped the market. And obviously, mining makes up a big portion of the ASX 200, and the gold miners have had a really good run this year as well, haven't they?
Yeah, they have. Look, it's come from that gold price obviously rallying. The two don't always move in tandem. But, when we're seeing these gold miners being able to, essentially make more money from the gold they're producing, often we'll see those gold miners follow suit. And it's come at a time when we're seeing central banks buying hordes of gold in the last sort of 2 years. We're seeing huge inflows into sort of ETFs. And I think that what we're seeing is that there is a compelling case really for, this increasing long-term exposure to gold.
Yep.
I think that when we think about what we've just discussed from the uncertainty perspective, gold is really sort of continuing to create a case that it deserves a place in a portfolio.
Thanks, Josh. Sorry, Josh, we're out of time. Appreciate you coming on the show. Appreciate it.